Hi, it's Rory from Own Money, and thanks for having a look. This is industry's Own Money's industry newsletter to keep you across what we're seeing in our business and around the industry in general. So obviously we had the Reserve Bank announcement on Tuesday the 19th of March, and as anticipated there was no change to the rate. Most people are saying that that's going to remain the same for a while going into potentially the end of this year, but some are now pushing for the next rate movement to be next year. Obviously, most people are saying that rate movement is going to be down. The Reserve Bank is being much more cautious with how they word things though. I don't think anyone wants to make the same mistakes that Lowe made with predictions of where he thought interest rates were going to go. So they are basically being very cautious, saying they don't exactly know which way the next movement's going to be. However, most people are saying that it's going to be down. Services inflation is still quite high though, and that's certainly a concern for the Reserve Bank, but that is being absolutely tempered by slowing consumption. That's why most people are saying that the next rate is going to come down. And it is going to really help people under mortgage stress. We are certainly seeing people under stress. We do know that Australians are very good at paying off their mortgages. We do know that that is the last thing to go. They'll clip their budget wherever they can generally to avoid defaulting on their mortgage of their owner-occupied property, but that doesn't mean they're not under a lot of stress. But those arrears and default rates are still reasonably low. I think lower than I thought they would be at this stage. But just a testament to people and how they treat their owner-occupied mortgages. We're seeing this as an opportunity to really coach our clients to say, rates will come down eventually, and when they do, you've got a big decision to make how you treat that extra money in your cash flow. We're encouraging people to pay off non-deductible debt with that money. So instead of just absorbing that and spending it in their general cash flows, and we all know how good people are at spending that little bit of extra money that they find in their bank accounts on a monthly basis. So we're saying leave your repayments the same, treat it as if the rates haven't moved, and you'll get through your loan much sooner. We want people to be in a good equity position on their owner-occupied property to give them options, and whatever those options are is going to be hopefully the right one for them. But the less debt you have on your owner-occupied, the higher your value of your property, the higher the amount of equity you have, obviously the better position you're going to be in. So that's what we're sort of using this as an opportunity to help our clients through that. What we're seeing are more investors and first home buyers coming back into the market. We had a really big auction weekend last weekend. We're expecting the same this weekend with our first home buyers taking the opportunity to get into the market, knowing that probably rates, this is the worst it's going to be for a long time. And so if they can make it work now, they should be able to make it work in the future. A lot of people are saying, well, hey, it's costing me more than what my mortgage repayment will be in rent. So why wouldn't I buy rather than continue renting? And there's so many programs out there, government programs. There's the banks are assisting a lot of first home buyers. So it's a really good time for first home buyers to have a crack and get back into the market, which we are certainly finding. And the other positive thing that we find for first home buyers is, in Victoria at least, and I'm hoping it's around the country, that the Consumer Affairs are cracking down on underquoting. So real estate agents who are just trying to build up their auctions with these ridiculously low quote ranges are actually getting fined now. So Consumer Affairs are out there at auctions, which I think is a great thing, and because it's heartbreaking for first home buyers to go to an auction that they think they're going to have a crack at, think they're in the range, and they're nowhere near it, and that's no fault of their own if they're given honest information from real estate agents, they wouldn't be in that position. So finally, we're seeing some, the next round of crackdowns that's happened before, and it's great to see it happen now again. On our investment side, we have a lot of conversations with people around what's the right time to buy an investment property, and it's really, there's so many variables. It's really when the time is right for them. We see, obviously, if people want to get in now, they might have some tight cash flow for a while rates is quite high. But if they wait, then they've got probably prices are going to increase. So it is it's a tough decision, and that's why we always encourage our clients to get the right advice from the right people. So getting a financial planner or accountant to do some cash flows and make sure that they do the analysis correctly. And as you know, we've got our own in-house financial planners, but we love working with external financial planners as well. We just want our clients, no matter where they enter the business, be it through home loans, property advisory, or financial planning, just to make sure that the other services are being covered by the right professionals, getting the right advice. So it's the right advice around should you be looking at yield? Should you be looking at capital growth, or a combination? And what's your risk profile? Where around the country should you be buying? Because unfortunately, a lot of people think an investment property should be property they saw in the next street. That's not necessarily, and usually not, the right investment property. So again, we just want the right people to get the right advice, and that's why we love working with our internal guys, but also external, as long as people are getting the right advice at the right time. As a mortgage broker, I should not be giving accounting advice, property advice, financial planning advice. It's not my bag. I shouldn't do it. Nor should a financial planner try to give mortgage advice. So get the right advice from the right people is what we are all about. From a internal point of view, we're wrapped that we are a finalist in the Small Business Champions Awards, awards ceremony in Sydney in a few weeks' time. So really hopeful that we can get that in the financial services category. Unfortunately, just missed out. Wasn't overly surprised, but I was a finalist for the Thought Leader Award for the Advisor, which is an industry magazine. A really worthy winner there, but it was just great to be recognised as someone who actually puts content out and tries to talk about broader industry type topics. So that was always nice to be recognised for these sorts of things. We have an upcoming workshop which is all about helping people build property portfolios, so bringing in the expertise of own money, which is exciting. So you'll definitely get some information about that. We're also doing some individual workshops for some of our referral partners, so some other financial planning businesses, some accounting firms who want it basically be a closed workshop for just their clients. So the principal of those companies is discussing their expertise and how they can help people on their property portfolio journey, and then we pick up where's needed. So if you're interested in doing one of those, we would love to have a chat with you about that. But once again, thank you so much for having a look. We really appreciate you taking the time to have a look at this. I hope it's of value. Please reach out if there's anything myself or one of my team can do. And until next time, thank you. It's Rory from Own Money.